Welcome back. Joining us to put the day's markets action into perspective is Viv Govender from Rand Swiss Offshore. Viv, thanks so much for your time today. Let's start off with markets action. A big sell-off in equities this week across all markets here at home. We've seen it in Asia. We've seen it played out in the US as well as in Europe. Are we just seeing some profit taking, or is there something in particular behind the sell-off?
Well, a couple of things. I think internationally, a lot of the sell-off is being focused on the tech sector. If you looked at what the performance of Microsoft and Nvidia, a lot of these tech companies have done over the last year and a bit and so on, they've basically been driving the market gains internationally, and therefore their results need to be spectacular in order to keep those gains going, and they have not been. And the market has punished them for that. And so that's one of the reasons internationally things have been a bit weaker. Locally, we've seen a lot of fluctuations happening, especially in the resources sector. I mean, if you look at resources this week, we've had some incredible days, and both up and down. And so there's a lot of fluctuations happening there. I think that's more to do with the fears about global economic growth, especially stuff that's happening in China.
And with the resources in particular, I remember there was a day where, I think it was Wednesday, where it was up almost over 4.5%. Then the next day it was down 2%. Those really big moves taking place there. And other big moves this week, tons of central banks made monetary policy decisions. Fed keeping rates changed. Japan surprising markets with the hike. The BOE cutting rates, beginning that cutting cycle in England. Also following the ECB as it began its cutting cycle in June. Viv, are there no fears, in particular with the cutting cycle, that some banks may be cutting a bit too soon? For example, this week we had an inflation print from the Eurozone where inflation edged up. I know it's just one print and there's still many more to come, or many other indicators that may fuel another rate cut or a pause or a hike. But are there no fears within markets among traders that, central banks may be cutting a bit too soon?
Too soon, too early. I mean, there's fears all the way around here. There's some of the fear they're cutting too soon, fears they're cutting too early, fears too late. Here's the issue here. I mean, I've seen studies done where they show quite clearly that if you look at a 1-year horizon, so after about a year or so, in fact, sometimes even 9 months, the Fed has no real ability to predict what's happening in the economy. Better than what the general consensus is. The Fed doesn't know what's happening in the economy, despite having, I think, twice as many PhD economists as any other institution on the planet, despite the fact that they have access to information quicker and more detailed information than any other institution out there. They really can't beat, or can't understand what's in the market. And we could see at the end of last year. At the end of last year, what the Fed was predicting for this year really did not come true. They were looking at cutting, multiple times already by this time. The chance of a rate cut by this time, which is August 2024, at the end of 2023 was something like 99 point something percent, less than 0.1%, or less than 1% chance of them not cutting by now. And obviously they have not cut yet. And so they get these things wrong, most definitely. The question now arises is, what's going to be happening going forward? I don't know, quite frankly. I think there's possibility that they could be cutting too early. That's true. Also possibility they're cutting too late. If you look at some of the indicators from the earnings we're getting, it's maybe possible the U.S. economy is already slowing down. And if you have a lag effect of 9 months, 18 months, whatever you call the monetary policy, the effect of these interest rate cuts, whatever the next ones comes about, will only take place in a year plus time, at which time the economy could very well be in a recession. So they may be cutting too late. Who knows?
Yeah, it just brings me to my next comment, because I wanted to say that it looks like different countries or different economies are doing what works for them, because this thing of, following the Fed path doesn't seem to be working, because it does seem like no one knows what is actually going on, Viv. Let's get into some company news. Earnings season is heating up in the US. Tech players, you did mention them at the beginning there. Apple and Amazon were out with numbers overnight. Let's start with Apple, beating analyst expectations on both the top and bottom line. iPhone sales, however, taking a bit of a knock. What did you make of those numbers?
Yeah. The market basically, hasn't really changed after market, but the share price was down about 1.6% yesterday, which, because you had the general market was doing, was pretty much still worse than what the general market is, but kind of what we expect from the tech sector at the moment. Results are pretty much as expected, as you said. if you look at Apple and their performance, for instance, over the last little while, year to date, they're still up about 17, 18% even after that fall. I think they are seeing some weakness happening in China, but other than that, everything else looks reasonably strong. So I think it was a generally good kind of performance for the company, just considering what's been happening with, like I said, China.
Amazon, in the meantime, posted a bit of a mixed bag of earnings. Let's zoom in on AWS. I was reading an article earlier today, and they just mentioned how that unit expanded by 19%, but there were concerns around its growing slower than its peers because I think Microsoft and Alphabet delivered 29% growth within its cloud units. Is this something to actually be concerned about?
Yeah, look, I mean, cloud is becoming again a very interesting thing, because a lot of the cloud infrastructure and so on is going to likely be used for AI if it does turn out to be a real phenomenon. AI, I think I've mentioned this before on the program, but if you look at basically the AI boom, just until 2019, not a single $1 trillion company. In the last year, you've seen at least a couple of companies that you can arguably have gained in market value by $1 trillion just in the last year, based on AI. So it's a huge boom in the market, and that has to obviously bear fruit in the future. It's going to bear fruit. It's not going to be these LLM trainings can be made. It's going to be the inference, the part that comes after the training, and then these cloud systems are going to be hugely in demand. So obviously, it's a very important sector to be competing with. Unfortunately, like you're seeing what's happening with Microsoft, you're seeing what's happening with Google.
Yeah.
Huge expenditure, huge spending going into it. No profit revenue yet. So it remains to be seen if there's something. This is a prize you want to win just yet, because you never know if the first mover advantage you get is going to be the one that lasts in the long term.
But before I let you go, let's just get your stock pick. What are you hanging your hat on today?
It's ASML. If you are going to be betting on this, basically, like I said, this tech boom, AI boom continuing, ASML right now on a 6-month basis, is down 6%. It's come down dramatically over the last month because of fears around exports to China, fears around, issues with the, like ability to sell stuff to the Chinese companies and so on, as well as the general, weakness in the tech sector. But if you look at ASML over the last, little while, this is the company that makes the machines that make the chips. If we are going to be seeing lots of global changes, we see a lot of issues happening here. More countries will probably want to have localized production, which is very good for ASML. So that's my pick for the moment.
Viv, thanks so much for your time and just taking us through the day's markets action. That was Viv Govender from Rand Swiss Offshore.